Are we
All
still on
right.
YouTube?
Yeah, I'm on YouTube. I'm sharing my screen real quick, doing a quick
Okay, good.
analysis on Snap. So I've
Okay,
got
look
key
for it.
levels I can pay attention to from this previous trend back here when it was bullish, way back when. And you get into a control bar, it gives you a very good idea of what's expected for possible range. Okay, that's on a weekly chart from way back here. And this is 2020. All right. So we can see over here it reciprocated. We got this big old control bar here for this bearish move. And the bottom of that sucker stopped right at a key level. So we can adjust our pivot. You know, it was based on this control bar at the time. It just exceeded it. But if you look at what happened here, you got that wick all the way down in that range, right? So you get a really good idea of what to expect if it breaks out. So now we can get rid of this pivot line, and I'm going to show you something else that's going to work even better for you. Instead of drawing a pivot, you'll see it easier when you find the point of control. You've got two of them here. You got this wick here, you got this wick here. So what you're going to do is take and draw what we call the shadow box across that wick, and that'll give you the key resistance for the current trend. Or it can be a price target for a breakout on the current earnings news. And it may or may not do this. The other thing to realize here, this is one hell of a bearish trend here. This can still be a bear flag, but you're going to know where the points of control are within that bear flag. You can find out what is to be expected for a trade, if this, then that type of scenario, right? So you can set up like a program. Now we know where that area is of control, and this is just a consolidation zone. There's another area of control right below it because there's part of a gap here. All right, so we're going to look at the daily chart and figure out where that zone is. And we can overlap it up to about the middle of this control zone. This just shows you where areas of liquidity are. If you've ever heard the term bag holder when it comes to talking about stocks with your friends and whatnot, you'll know that there's going to be a lot of people who bought this run and then got smashed in this gap, right? So there's going to be a bunch of bag holders wanting to get close to break even as possible, or they might even be willing to take a loss in that zone. So a lot of these people are going to unload their bags when it breaks this resistance point. Now that we're in this gap, we've got a good chance to close it, but there's going to be a pivot that's very pertinent right in the middle of that mess, and that's right where these two shadow zones intersect. So let's drill down into it even tighter. We'll run the 2-hour chart. That's some pretty parabolic bullish momentum. This is a nice clean measured move with a pullback to 50%. Actually, that went to like 66% with the extension on the wick. Very cool. That's actually very healthy. We can set up for a third leg into this liquidity zone. And look, you're already in the gap. You know where your target is. It's all the way up here at like 1250. So it's got room to run that, but at the same time, we're just barely in the lower end of this liquidity zone. There's a supply zone here. A lot of people are going to be wanting to unload their bags from that gap. So when you see this type of thing, pay attention to it, especially when it's coming to earnings. I'm going to go look at the calendar on that without disrupting the chart so I can go and see when the earnings is expected. Unless you can comment it faster than I can get it. Okay, where is it? Earnings expected. Oh, today after hours. All right. Pretty simple play then. So now we've got a nice solid trend. It's met its measured move target. This is the run up before earnings. Now it'll either go up, down, or sideways. We know there's 3 directions in the market. We're barely breaking into this liquidity zone. It's got a good chance to run up to that target pretty damn quick, right? I've seen it happen before on an earnings call where you get one big ass bar running up, people chasing it, stacking orders right when the bell rings basically. And then they get really disheartened when, Mr. CEO picks up the earnings call microphone and says, yeah, well, this isn't great. Instant flashing red candle straight down to the bottom of that zone, right? So you've got plenty of range to trade in there, all the way to 1250. Very possible. Sometimes if the expectation of the earnings call is a little bit bearish, and at this point it's not. The expected EPS is 11 cents a share. Um, you'll get some speculation where people recognize that this has made a big bullish move. The measured move target's been met. A lot of traders will profit right at the bell. They'll flash it down, and then you catch a little bounce, and that gives you about where you can expect price to settle on a pullback. So we got all the way down to about 1060. Just kind of eyeball about half of this whole move here. It gives you a pretty good expectation of where it could pull back to. So holding through earnings, I almost never do with shares or options, but
You share your screen, Jeremy, sorry.
again, oh, did Stone take his off?
Yeah.
Let me throw it up here. There we go.
Thank you.
I didn't realize he took his off, and I was over here, yapping at someone on YouTube. So anyway, you find your key area in the middle of a bar, and that's the bar right here. And it can be approximate. You don't have to be dead on with these. You just have to know about where they are. And you can call that your red zone. So if it snaps below this price, you know it's going to retrace the rest of this down to the bottom here, 960 or so. If it stays in this range, it can certainly go up to the next pivot, and I'll mark that one out with just another line so you can see the transition, but you'll know where it is with the line. You've got plenty of range in this, and earnings can be very volatile with this stock historically. You look at earnings calls, and you got this big dip here. That was a big old gap down for earnings, another gap down for earnings. All right, well, this one waited a little while, and then poof, big old gap down. Look at this mess. That candle dropped way the hell down here. So you can expect really big range on Snapchat's earnings. That definitely happens. It's happened in the history. So we've got quite the range here to trade on our daily chart and our 2-hour chart. We know where it all is. It can even very well run up to one of these targets during the day before close. I mean, this is huge range. It's volatile. It's a day trader's dream and a swing trader's nightmare. So you kind of going to trade it candle for candle at this point. But if you're looking to hold earnings, I can say good luck. But it is certainly very volatile in that after hours. Right when that bell rings, you can expect some big candles to happen, I'm sure. And that's what a 5-second chart is great for. You won't see it during the day. It'll be when it's volatile. But nonetheless, you've got some setups you can trade, and that's the whole point, is you don't want to just, expect it to run to here or there for an earnings call. You want to trade the price action, and you want to know where the targets are. So it's as simple as looking left, finding all your control zones, mapping them out. And there's some sub pivots in here too, I'm sure. We could go to the daily chart and look at a couple zones here. Like there's a control bar that goes right up to that, right here, plain as day. We've got another little control area that's right at the base of that candle there. There's even a little gap here that's probably filled at some point, but a lot of times they get revisited. Where did that pivot end up? 1162. I mean, looking left, you can find all of these control areas, and you can find all the relationships to all these different pivot areas. You know where the bag holders are. You know where they're likely to go and empty those bags when they get a little lighter. That's just how the trade is made. But from earnings, I can almost guarantee you Snap's going to be volatile as hell. I just can't give you an exact direct target of which way it's going to go, but I know where it can go. And extreme is like 960, so I mean that's about the middle of this measured move. So let's round that to 940. So there you have it. It's the best I can do on an earnings call. I can go and set up, swing trades later on. We can figure out after earnings where this is likely to go based on previous price action. We can certainly look back in the previous trend. If it does break that liquidity zone, it's got one hell of a gap above it. I certainly wouldn't try to, wager on reaching that gap, but it's certainly not off the table. It's $22. Hello. So if you get a nice swing trade out of that, if they start turning things around, they have some good numbers come through, they beat earnings or exceed it by an extreme amount, yeah, it can get really volatile, and then you just start looking left for all the control areas of the previous trend. And when you see gaps like this, you can get some pretty big swing trades. Definitely not a swing trade through the earnings, but you've got potential to close many a gap here, so definitely keep out for it. All right, well, I'm going to wrap it up on the YouTube. Thanks for joining us, guys, and like and subscribe and all that other stuff. Everybody kind of says that sort of cliche thing, but what we'd rather tell you is, tell your friends, and if you guys like what you see, give us a try. I mean, we got that prestigious, we're considered the most valuable or the best value, online trading class by Investopedia. There, we can boast and brag about that. But what we do is earn it. We want to maintain that status, and the more we can get together and learn price action together and be able to teach to others what we learn and pay it forward. That's why we're here. We're not trying to sell a service to make money. We make money trading. The reason we're even charging a fee at all is just to keep the business going to where it can just be our platform to be here for you guys. That's it. It just keeps the lights on. And if it gets bigger, we just grow with more monitors, more moderators, more moves, more rooms. A lot more material gets made. It just grows. And if it organically grows, cool. We'll still keep our rates low. Anyway, thanks for joining us. We'll see you guys tomorrow. Hopefully we'll have some better price action leading into tomorrow. And then I think around 2 o'clock we're going to probably go live with some good times. Or maybe a nothing burger. We'll see what happens. We're going to start mapping that out probably tonight. See you guys later.